Hello, investors, traders, and fans of the cryptocurrency world. Welcome to our channel, where we bring you the latest news, in-depth analyses, and real projections about the digital currency universe. At the Eastern Economic Forum in Russia, Anton Kobiakov, a close advisor to Vladimir Putin, made a statement that garnered significant attention. He claimed that the United States is preparing to use cryptocurrencies and stablecoins to secretly devalue its $37 trillion national debt. According to Kabakov, the plan involves transferring this debt into a crypto cloud, which would reset the global financial system, leaving other countries to bear the consequences. This idea, although it may seem extreme, echoes a previous proposal by Michael Saylor, CEO of MicroStrategy. Saylor publicly argued that the US government should sell all its gold and buy Bitcoin, contending that this strategy would devalue the assets of rival nations, which hold large gold reserves, while strengthening the US economic position. The central question is, how realistic is this scenario? While the exact execution proposed by Saylor is unlikely, the underlying logic to valuing debt through innovative financial mechanisms is a concept that has been used before. The US has a long history of devaluing its debt through inflation, a process that effectively reduces the real value of the money to be repaid. The mechanism is simple. If a country increases the money supply without a corresponding growth in the production of goods and services, prices rise. Thus, when the debt is repaid, the real value of the money returned is lower. Stablecoins, which are backed by US Treasury bonds, could amplify this process on a global scale. By encouraging the global adoption of stablecoins, the US could export inflation, sharing the inflation tax with holders worldwide instead of limiting the impact to US citizens. However, this plan faces significant obstacles. Global distrust of the US dollar and its financial system is already leading many countries to increase their gold reserves, a historically stable asset. Furthermore, the lack of total transparency in the reserves of stablecoins like Tether or USDC generates concerns about their true backing. As for the possibility of the US adopting Bitcoin as a strategic reserve, it is more likely to happen indirectly. Instead of the government buying Bitcoin directly, which could cause market turbulence, it could support private sector companies like MicroStrategy, which already act as Bitcoin proxies. If the cryptocurrency establishes itself as a critical asset, the government could then acquire a stake in these companies, following a model already seen in other sectors. In summary, Russian advisors' prediction reflects real concerns about the evolution of the global financial system, though the details may vary. The idea of the US using digital financial instruments to preserve its economic influence is plausible and aligns with historical patterns. The future holds significant transformations. Being aware of these dynamics is essential to understanding the next chapters of the global economy.